How's it going, everybody? Welcome back to the channel. My name is Jay, and this has been a busy week for Elon Musk and Twitter board members and shareholders. Earlier this week, it was revealed that Elon Musk has been acquiring shares in Twitter and has accumulated a 9% stake in the company. That was followed by news that Elon would be joining the board of directors of Twitter, and then backing out and saying, nah, I'm good. Then, a day or two after that, Elon Musk announced that he was filing to take over Twitter at a valuation of $43 billion. But a lot of people were saying $43 billion isn't really an attractive offer for Twitter. The Twitter board of directors and Twitter major stakeholders, led by Saudi Prince Al-Walid bin Talal, rejected Elon Musk's bid for the company. But the story isn't over there, because it's possible that Elon Musk could still take over Twitter by way of a hostile takeover. A hostile takeover is exactly what it sounds like. It's a takeover of a company without the approval of that company's shareholders and board of directors. This tactic is often used by activist shareholders who feel that a company is being mismanaged and therefore not properly rewarding its shareholders. So they'll execute a hostile takeover to take over control of the company, oust the management and board of directors, insert their own people so they can run the company how they see fit. If you're familiar with the movie Wall Street, it's a tactic you see Gordon Gekko use in that movie.
I am not a destroyer of companies. I am a liberator of them.
And back when I was in business school, we actually watched the movie Barbarians at the Gate in our finance classes because it so accurately depicted the mechanics of a hostile takeover. So if you're interested, definitely check out that movie. But you didn't come here for my movie reviews. A person or a company can execute a hostile takeover in a number of ways. They can either just attempt to buy the necessary number of shares of stock to acquire the majority stake on the open market. They can employ a proxy fight, which if you're a fan of the HBO show Succession, you'll be very familiar with.
Fairy tales, talks poison pill, other defenses. It'll be hostile, hostile, hostile.
Or the third option, they can issue a tender offer. And this is what Elon Musk did when he offered to buy Twitter for $54.20 per share. But a hostile takeover is called hostile for a reason. And that's because the company that's the target of the takeover is far from defenseless in this situation. And Twitter has just implemented one of the most effective defense strategies against a hostile takeover, the poison pill. Now, a poison pill is actually fairly common in these situations. It was used in 2012 by Netflix when Carl Icahn was trying to take them over, and more recently it was used again in 2018 by Papa John's Pizza Company in order to prevent their ousted founder from retaking over his shares and control of the company. And as you may be able to infer from the name, a poison pill is hard to swallow. It's the company that is the target of the takeover, trying to make itself not worth the time, effort, and money for the acquirer to continue with the takeover bid. The name actually comes from those little cyanide capsules you'd hear about spies carrying on them so they can axe themselves if they're ever caught by the enemy.
Hail Hydra!
So how does the poison pill work in the financial sense? And how exactly might it stop Elon Musk from taking control of Twitter? So the poison pill strategy that Twitter has implemented is what they call a flip-in poison pill. This is where the company announces a plan to allow all shareholders except for the acquirer, Elon, to purchase additional newly issued shares of the company at a steep discount. Now, Twitter has set this up so if or when Elon Musk or anyone else acquires at least a 15% stake in the company, the poison pill will be triggered. And at that time, every shareholder except for Elon Musk will be entitled to purchase newly issued shares of Twitter stock. So what this does to Elon Musk and his takeover bid is these new shares hitting the market, number one, dilute the stake of the company that he's already acquired. So his 9% will get diluted down to, who knows, 7 or 6 or even 5. And it will make it much more expensive for him to acquire his majority stake in the company. And the reason the poison pill works so well is because those new shares are being offered to shareholders at such a steep discount to the current market price. Shareholders buying those shares already have a percentage of profit locked in. So that offer from the company starts to look a lot more attractive to the shareholders than the offer from Elon Musk. But Twitter implementing the poison pill strategy does not mean that this story is over. Elon can still acquire his majority stake in Twitter if he wants. It'll just be a harder fight and more expensive for him to do so. And what remains to be seen is if he's really up for the fight, or if this was just one of his many very public trolling attempts. Let me know what you think will happen and what you want to happen. Do you want to see Elon Musk take control of Twitter, or are you rooting for Twitter to fend off his takeover bid? I don't do much of this current events type stuff, but if you enjoy it, let me know. I'll certainly do more. Thank you as always for watching, and I will see you in the next video.